Nice.
All right.
Which chair do you prefer? Okay.
So welcome again, everybody. On behalf of Deloitte, my name is Sarika Gigi. I'm a managing director in the payments practice. And with a number of these events every year here, we're very happy to be sponsoring these together with NYPAY. Jeff Tenenbaum is the MC of tonight's event, and we welcome already Antonia Romeo, who's had a bit of an accident. Unrelated to Brexit, but if you look at her, don't worry. She might. She's still capable of presenting her story tonight. So with that, over to Jeff.
Okay, great. Thanks, Ulrika. And a big thank you to Deloitte for giving us the space to use tonight. Also want to thank Opus Consulting for their generous sponsorship of this event. My name is Jeff Tenenbaum. I am Director for Global Business Development at Oriema Consulting Group. We are a boutique management consulting firm in the US and UK, focusing on the financial services and retail spaces. Through 30 plus industry roundtables, co-brand partnership practice, corporate finance, and of course, consumer research on mobile payments, credit card, and debit card. Tonight, we are pleased to have Antonia Romeo, who is Her Majesty's Consul General, and we're going to have a fireside chat. After that, we'll do a panel discussion with some RegTech entrepreneurs. After the chat, Antonia is going to have to leave straight away, but her team, raise your hands if they're here. I want to thank the UKTI team. They'll be here for the duration. And with that, let me introduce Her Majesty's Consul General and Director General of Commercial and Economic Affairs in the United States, Antonia Romeo.
Great, thank you. It's working. So look, first of all, sorry for turning up. First of all, in a cocktail dress, and secondly, with a gash on my forehead. I'm second week in the job. I'm going on, and it's already like working out really well. I am going on from this to another event, a Shakespeare event. So I'm hoping they'll think I'm channeling kind of Lady Macbeth or something. But I'm also, today and tomorrow, I'm moving into the British residence. So I've done that thing where you reorganize your whole place to move out, and then you're used to things being in a different place, and anyway. So that was the accident. So I'm sorry we're starting late.
No
worries
at all.
I'm excited to be here.
So, I introduced you as Her Majesty's Consul General, but really you're the new Consul General, right? So you're new in the position. So maybe why don't we start with your talking a little bit about the position, your role, and the journey that you've taken to get here.
Okay, well, thank you. So first thing to say, there's two main parts of the job, as Jeff has said. The Consul General role in New York, in that role, I promote Britain into the tri-state area, so I'm responsible for promoting British interests, Her Majesty's interests, but those of the British people, and everything to do with, be it national security, foreign policy, as well as economic policy. The Director General of Economic and Commercial Affairs is a new role, and in that I'm responsible both for the foreign and commercial arm of the British government across the whole of North America. So I'm responsible for trade between the US and the UK, and also inward investment back into the UK. So my job's got quite a lot more challenging / interesting in recent weeks. And I also direct all the work on economic and prosperity issues for the British government across the whole of the US, including the trade negotiating team based in DC.
It's a lot.
It's just a few things.
So, as someone who works to promote U.S. investment in the UK, what are you telling people now that there's so much uncertainty at the moment?
Well, look, I think it's to be expected that following the vote by the British people to leave the EU, there's obviously there's a lot of volatility in the markets at the moment, and there is, as you say, some uncertainty. The key thing to note is this was a vote by the British people on its relationship with the EU. And we have to determine the precise terms of that relationship. It wasn't a vote to turn inwards. In fact, on the contrary, the Prime Minister and the new Prime Minister and the new Foreign Secretary and the new Trade Secretary have been clear. This is a vote or the government's agenda is to promote Britain even further, to strengthen our economic and trade ties with major allies. We're still part of Europe, but also much more importantly now for us is our relationship with those not in the EU. The US is our biggest market. We have each other's biggest stock of inward investment. The US is the UK's major export, recipient of most exports. And obviously we're both the financial services hubs of the world. So I think there's a lot of work to be done to build those ties between the US and the UK. And the message is very much Britain is open for business. We've got a highly competitive tax environment, high quality regulators, good labour laws. We've got schools, we've got rule of law. We've got everything that US investors should want to invest in the UK.
Well, so on that point, so if I were to ask you exactly why is the UK such a great place to do business, can you elaborate on that a little bit more?
Well, so, I mean, as I say, I think the key thing is we're a very open economy.
Yeah.
And in that way, from the point of view of American companies, we're very similar to the States. We do have a very competitive tax regime. We've got the lowest corporation tax in Europe. We have very good, from the point of view of business, we have a good sort of labour legal regime. Yeah. We have great regulation. We've got very high quality regulators that are recognised as such across the world. Yeah. And also just from the basics of if you're looking to live somewhere, I mean, apart from London being a thriving global capital, we've got great schools and we've got a whole raft of other benefits attached. Yeah.
So, I mean, specifically, what is the government doing to support the ecosystem, the FinTech ecosystem right now?
So in terms of FinTech, I mean, a lot of stuff. So we have, there's more people working in London in FinTech than there are in New York or Silicon Valley. We've got 44,000 people. Financial services contributes 9 billion towards our 9% of our GDP. And I mean, it's finance for us is a sort of huge area, and FinTech, we think, London is a real hub for FinTech. In particular, the FCA have been doing a lot, both, I mean, I hope you've all heard of the Innovation Hub and Project Innovate, which is looking really to make it much easier for people to gain access to finance, to have a much less restrictive regulation regime. The sandbox announced in April this year, we think will be huge. And we're really very much encouraging FinTech companies, especially if you're a startup, but if you're a big company, London's a great place to set up. And we are looking for ways to reduce the bureaucracy that you will face, and also just to make it easier to do business. So, for example, we've been looking at, the FCA has been reducing regulation around peer-to-peer lending, for example.
Yeah. Okay. For companies that might be interested in getting involved in the sandbox or that want to participate, what's the best way for them to do that?
Well, there's two things. I mean, first of all, the FCA has a fantastic website, which I assume is fca.gov.uk, and I'm just gonna, my team are nodding. So, so that's one thing to do. And the other thing is, so my team are in the back, Maria and her colleagues. Please do grab her in the break, because we do in the UKTI, our foreign commercial arm, we exist to help companies who want to invest into the UK, and we exist to help British companies who want to work or export to the US. So essentially, our job is to make your lives easier, to understand from you what the issues are, what would make you more inclined to come to the UK, and to make it happen. And we have a very direct link into the ministers and cabinet ministers back in the UK who are very keen to understand what more we can do to encourage London as a really thriving finance hub, and also other cities outside London.
I'm conscious of time. I know you've got other places to go, but you're not just
nowhere more important than this.
Well, I fully appreciate that. But you're not just new to the role. You're new to the U.S. You're new to New York, right? So, what are your first impressions? What are you excited about in the role? What are you excited about being here?
So, I mean, I guess I'll give sort of two answers to that. I mean, from a professional point of view, New York is just a fantastic place. There's no better place to be a Brit, basically. And if you're going to promote Britain anywhere, then why wouldn't you want to do it in New York? It's a massively Anglophile place. And it's and I'm a Londoner, so I feel very at home here. Also, as I referred to earlier, recent events has made the special relationship between the UK and the US even more important.
Yeah.
It means that we really want, as a government, we really want to be promoting US ties with the US. And so that's made my job hugely interesting. Dare I say it, the best job in government right now. So from a professional point of view, it's fantastic. I mean, from a personal point of view, I mean, New York is just one of the best cities in the world. I mean, I was featured, minor plug, I was featured in the New Yorker Talk of the Town this week. And I've got to say, like, I mean, I feel like job done at one level, like maybe now I can just go home. But, you know, just the whole thing is completely brilliant. Being here, I think New York, I'm married to an American, and so I feel very tied in with America. But New York, there's always something to do every night. You know, you can be talking at a RegTech event. You can then be going off and doing an event with Shakespeare's Globe. I mean, where in the world else can you do that?
Yeah. Well, listen, I really appreciate your coming to spend time with us. We hope you do it again.
I'd love to. Thank you very much for having me.
Yeah. Antonia Romeo. And with that, let me call our panelists up to the table here, and then we'll move on to our panel discussion. And you guys can take these chairs. Over here. Over here. Great. So what I'll do is I'll introduce the panelists. I'm going to have them talk a little bit about the companies that they represent, and then we'll go into a little bit of a Q&A. So tonight, we're pleased to have Kurt Vandenbroek, CEO of Ancoa, David Hesketh, who is CEO and co-founder of Trading Hub, and Paul McCullough, CEO of Helm Solutions. So guys, why don't we start with you, Kurt? Why don't you introduce yourself a little bit more and talk a little bit about your company? Let me kind of pull the slide up here on the screen.
Okay, well, thanks for introducing Jeff. Does this work? All right, so Kurt Vandenbroek, CEO of Ancoa. I've been with the company for about 2.5 years now, and I started actually as an investor in the company. Ancoa is a UK-based RegTech, like they call it today, company in a very interesting space, capital markets, where we look for potential market abuse, market surveillance across asset classes. So basically, what we do is we look in trade and market information. To see whether there are any patterns that indicate that there is a possibility of abuse or operational risk, and then we create alerts. And the analysts of the companies that use our software analyze whether there is a reason to escalate it either to the regulator or internally to their management. It's a very fast-growing market, and I think we're playing in the same space. I have a competitor here of us because, well, transparency of the market is critical, and everybody here that invests in their own pension have a benefit of what we're doing, because we're trying to make sure that your investment is not negatively impacted by other players in the market, big players that have a lot of money and that potentially can have a negative impact. So I think everybody here that has a 401k or has personal savings should have an interest in what we're doing.
And Paul, why don't we talk about Helm?
All right. First off, thanks for organizing this. Thanks for putting this together. So very quickly, Helm, it's kind of in depth. So I apologize if I lose you in acronyms or tech speak, but essentially every system, every process, every line of code has a corresponding regulatory requirement. We address those requirements for FinTech. And essentially the problem is that companies lack the visibility into their cybersecurity and technology compliance gaps. So before founding Helm for 3 years, I was Vice President of Technology Law and the Global BCC Chief for Cybersecurity Compliance at JP Morgan. The thing that kept me up at night was this lack of visibility. And it's because technology and compliance speak different languages. So, I mean, I could tell you horror stories if you want. We'll grab a beer afterwards. They're a lot of fun. But essentially, in March of last year, I left JP Morgan and put together a team, and we started meeting with regulators and asking, what can we build you to meet your needs for cybersecurity and technology compliance in the sector, to make sure that as technology advances, the risks with technology are massive. Even the smallest problems can scale instantly. So by working with the regulators, we're getting the regulatory clarity from them, and we put it into our system how regulators around the world are regulating configuration of different systems. And then for customers, what we have is a system that it's been equated to a TurboTax on the front end and Black Duck on the back. Ideally, we're getting to the point where we'll do one-click compliance review for your cybersecurity and technology operations. We're not there yet, but we're getting there. For instance, we'll scan your web page and find out your SSL vulnerabilities. We'll find out your accessibility compliance issues, your privacy policies, so on and so forth. But we have to ask, are you marketing to children under 13? Because if you are, well, then that brings in a whole host of children's privacy laws. So currently the paradigm is very reactive. A regulator announces a law and a company has to try and find out, okay, how does that impact us? You usually get about 5 to 7 different groups in a large organization: legal, risk, compliance, tech ops, controls, government relations, and corporate communications, that's trying to find out, okay, how does this affect our technology? We, by starting with the configuration of your systems, make it proactive. So even if a product owner for your web page or for your app or for something like that, even if that person leaves your organization and is replaced by someone else, it doesn't matter. The fingerprint of the application is there. And then anytime a law impacts you, you get an alert saying your compliance score has changed by X percentage. This is the issue down to your code that you need to modify to be fully compliant. Now, coming to my colleagues here, we do only visibility. Now, there are tons of solutions out there on the market that speak to different needs in the regulatory and financial technology sectors. Problem is, a lot of companies don't know what they need. So when we scan your systems, we'll direct you to certain companies and say, oh, this company will provide you the onshoring that you need to be compliant with onshoring regulations for customer account files. Or this is the company that you'll need to be able to review your anti-money laundering automation or risk mitigation. So in short, actually, if you just go to the
Next slide.
Yeah, sorry. So this is basically, compliance. The job of compliance is you ID the regulations, you map them to policies, products, operations, risk, and controls. You try and find out, what's the impact analysis, what are the gaps, and then you conduct research, you consult with the government, and then you put remediation plans in place to address those gaps. And you'll see at the very right, there's a whole list of a lot of companies that essentially check the boxes for those remediation plans. Then if we go to the next slide, there's only 2 more slides. What we do, and I'm kind of long-winded and I apologize in advance, we're almost done. So the regulators feed into the platform. If a regulator doesn't understand a new technology, we get sector professional groups like the FIDO Alliance for authentication, or BitDevs or Ethereum or certain blockchain groups to define the sector, how it can be configured. Those are the gray boxes, and the regulators can, with the blue boxes, regulate what they want in the sector. Then basically you have the checkbox as a company. The tool in the back scans your code. On a dashboard you see your gaps, and then it'll take you to solutions. And then the last slide is basically what we're doing for regulators is great in this sector because we're making sure that their job is more extensive and effective. They can research FinTech themes and practices around the world. They can draft laws in direct consultations with any size company. If I'm drafting a law that's affecting a certain measure, a certain configuration pattern, I can actually put it through our system, and companies can respond anonymously saying, hey, this will adversely impact me because of X. And instead of speaking to 500 companies, regulators can now speak to 5,000. And we use a platform to basically whittle that down to consultation silos so they know what the main issues are. And lastly, when they implement regulations, instead of some compliance person who doesn't know anything about technology trying to understand what a new configuration pattern means, it actually goes straight to the tech ops person and says, hey, PCI just changed their password length standard. You need a longer password, or things like that. So that's what we do.
Thank you. And then last but not least, David Hesketh, talk about, pardon
Can
me.
you do the first slide first?
There we go.
Isn't that a cool picture?
Very cool.
Especially in
So-
the US.
Yeah, exactly.
Yeah.
So, Dan, just put your hand up over there. We've both got business cards. On the back of our business cards is a different animal. I only picked up the bears, so if you get one from me, it's very dull. And also, I haven't got quite as many business cards as he has. And he's got loads of different animals. So, you should get more cards from Dan, and that will absolve me of responsibility of not having remembered to bring enough business cards.
Animal-based platform.
Yeah, it's very good. Yeah, it's all about animals. And if we go to the next slide. So, you can't read that, so I'm going to tell you what it says. We started out doing PM profiling and trader profiling. I used to be a trader at Merrill. One of the things that I found annoying was that I was a structured credit trader. I was really nice, and I had nothing to do with the demise of Merrill. It was fine when I left in 06.
Good timing.
Honestly. But what happened was I was sat across the desk from a bunch of bond traders, right? And some of these guys worked really, really hard, and they'd eke out some P&L every single day. And some of the other guys just liked kind of, you know, I think placing bets is the wrong word, but possibly a very accurate description. So they're basically just spending our bonus pool, and they have an asymmetric payoff opportunity, right? If they do well, they get paid handsomely. If they do badly, they just go to another shop. So we set the company up about 6 years ago, and the idea is to analyze the performance of traders and PMs. Look for things like, do they hold losing trades longer than winning trades? Do they double up only on losing trades, like the martingale strategy? And one of the metrics we came up with is the skill metric. Now, the skill metric, I won't go into huge detail, obviously with competitors here, but you know, these are nice guys. This is about us showing you our products, right? So being grown up about it. But we had the skill metric, which started to identify people that were not just good, not just great, but too good to be true. And so we started to analyze data where we went into customers and said, this looks a bit suspicious. And a few of them came back and kind of gave fumbled responses about, well, you know, we're quite dominant in the market, or it's not our fault, we're just, you know, great. And actually what we realized was we were identifying people who were probably manipulating the market. So we analyzed data. This is the top point. It gets quicker. The top point says that we analyzed data for a number of regulators, the CFTC. We analysed data for the SEC. We analysed 1 billion trades for the SEC. We've analysed data for the French regulator, 500 million trades. The Indian commodities regulator, 250 million trades. FINRA are looking to do an installation of this tool. And the reason is that we're able to remove lots of false positives. Now, the tool has only been around about 1.5 years, but because we were doing all of that profiling work, we'd already solved the problem about how do you do multiple different asset classes. So we've analysed things as diverse as power trading in Canada, carbon capture credits. How much does a tanker of 80% methanol, 20% ethanol travelling around the Cape of Good Hope, how's that valued? We've done rate swaps, we've done equities, equity derivatives, spot FX, forward FX. So we're able to analyse every single asset class and every single product type. And it's one of the things that marks us out differently. Now, you know, the client list, you know, we can all list off random clients, but, you know, UBS, Invesco, Balyasny, Schroders, Aberdeen, Pictet, Mizuho, the list goes on. We're doing really, really well. Part of the reason, as we've already talked about, is there is a regulation in Europe that requires everyone in Europe that touches the trade, whether they're sell side, buy side, broker, exchange, clearinghouse, to have an automated solution. And it's driving us over to the US because firms in the US are starting to use us as the provider. Now, we've already talked about FINRA, so I'll skip that. But we work in a different way to other vendors. You know, we were chatting with the Ancoa guys, and they said, look, there's space enough for everyone, and that's true. There's space enough for everyone in this market. And we will differentiate ourselves on our unique selling points. And some people will choose Ancoa, and some people will choose Trading Hub. But there are lots and lots of tools out there. You have to understand the difference between the tools. And that's what I'm happy to chat about over a wine, hopefully, later on.
All right, guys, thank you. So when I think about RegTech, and I think about using technology to automate compliance functions, or other functions for that matter, I think about what costs is it taking out of the system. So, what are the metrics that your clients would use to frame up the ROI of what your solutions provide?
Pick a man, any man.
You guys go for it.
Well, I'll talk unless anyone shuts me up. So be wary of that option. So you could say, okay, there was an existing requirement to analyze trade data on an equities basis, right? So in Europe, in North America, people have to analyze the trade data. What's changed, and this is true for ANCO and it's true for us, is there is a regulation requiring all the firms to do it. So this is actually not something that we are automating that already exists. This is a requirement that these guys actually have an automated system and they're not even looking at it right now. There are new offenses. Layering and spoofing is the best one you can think of, right? Someone's just been convicted, you've got the Hand of Hounslow. What a great name. The Hand of Hounslow is another thing that Britain's exporting is insider trading, market manipulation. I didn't say that. So, what we have to do is actually solve this problem using clever analytics. Anchor do it one way, we do it another way. It's a requirement. So you could also argue that the other way around, they'd actually have to do it themselves manually, and they can meet the legislation in Europe if they can analyze every single trade during the T+1 period after they've executed that trade. Yeah. That's fine if you've got 2 people, but it doesn't work if you've got 1,000, 210.
I can actually build on some savings in a different sector. I feel like the odd man out, but I usually am. I'm usually the guy coding and translating it into law. But actually, in terms of the savings for our system, it's compliance is not usually cost generation; it's usually cost avoidance. But we try and translate that to cost generation as much as possible by giving companies real-time visibility into their cyber and tech compliance risks. If we actually had one regulator state that if the Helm report says that a company's systems are 100% compliant with all applicable cybersecurity and technology requirements, and there's a cyber attack or a privacy incident, then through our platform, using an anonymous messaging platform, the customer will actually approach the regulator, and regulators have offered safe harbor. They said, we will immunize you from prosecution and keep it confidential to address the developing technology risk. Regulators, this is one of the things we built with direct regulatory input. They want to hear about SSL vulnerabilities before they're announced to everyone, and then everyone's trying to exploit the vulnerability while banks are trying to fix it. The other issue is we save a lot of time for compliance by providing regulatory clarity. Now, in the UK, principles-based regulation versus prescriptive regulation in the US. Prescriptive will tell you what the law is. Prescriptive, principles-based, let's figure it out. We kind of fill in the gaps with all the other types of regulation. You want to say strong authentication and leave it at that? That's fine. We'll take PCI, ISO, BSI, all the different standards, and we'll fill in the gaps. And then in terms of costs, we save a lot of money for companies because given the fact that we have configuration profiles for your systems, you can, if you get a PCI audit, you can actually fill out all the technical components with one click with field code matching. For any other audit, regulators actually enjoy this too. If they want to audit a system configuration, what encryption are you using? If they use that field code, I can push one button and not have to know what the heck AES 256 even means. The other thing is by democratizing compliance, if a company puts out an RFP, we're making sure that even small companies can compete with big companies by saying, well, we meet the Helm standard of cybersecurity and technology compliance. So you get a lot more opportunities as a large institution to contract companies of all different sizes coming to you and probably save some money off there. And we've also been used by a few big banks, their IT risk departments. IT risk goes to senior management, says, hey, we need another $1.5 million for backup servers for biz. And then they get turned down. They say, well, actually, it's to meet these business resiliency requirements in this jurisdiction specifically. Well, then it goes from tech ops problem to senior management's problem that's now learned of a problem that they have to address. So it actually justifies a lot of costs for IT risk, and there's a lot of more benefits. It's going to be used. We were speaking to one large reinsurer as the basis for issuing cyber insurance, and the higher our score, the lower your premium, as well as we provide a know before you launch capability. You're a US company, that's great. Your systems are perfectly configured for FFIEC, SEC, CFTC, If you want to launch in the EU, well, you click one button and then you can find out how your systems compare to NIS, whether or not you're micro enterprise or not, and then PSD2 and all these other regulations. You can even know GDPR before it's in effect. So we provide a lot of savings.
I'm going to build further on you guys. So, and on your first slide with the bird, the hawk, it's a great picture. So, if we really take a high-level perspective on what we're doing, is we're actually taking cost out of the whole system. Because if you look at trading, and then I refer again to people that have savings and savings money, and the cost of transactions have never been as low as they are today. And that is because actually the system is more transparent than it has ever been. And transaction costs, because of automation, but also because of compliance, have been gradually decreasing. So if we go into a company where we're trying to save one or two people in the compliance department by making sure that they are efficient and that they have all the data that they need at their fingertips at the moment that they have to make a decision whether this is really an abuse case or whether it's a false positive. But we have to take it higher as well and saying, what have we learned over time and how can we contribute with what we see in the data to make that business more competitive? And how can we make sure that the company is compliant or reduces their total risk over the long term, and how can we contribute to that? And constantly, from an ANCOA perspective, we're not trying to do only the trade surveillance and analyzing that data, but also trying to look what's the value that we get out of this, and how can we help the company in doing a better job, better business, and taking costs out of their system so that the benefit comes to the community.
So you guys all operate in the US and UK markets. So why don't you talk about your experience in operating in each regulatory environment, the pros and cons of each?
I'll go first. All right. Pros and cons of each. U.S. is prescriptive. It's really easy to get the U.S. regulators into the system because they're very straightforward. To get regulators involved in the system because the regulations are very clear. They're very straightforward in terms of the parameters that are prescribed. Furthermore, in terms of engaging regulators, I've spent quite a bit of time in DC. If you're in DC, you can pretty much have a meeting with anyone. And once you tell a regulator, hey, this is going to save you a ton of work, and hey, this can be the basis of regulatory sandbox here, and hey, this, that, and the other, people start to listen, especially as more and more hacks become more and more high profile. In fact, I still get emails about my OPM profile being acquired by some Chinese hackers every now and then. So if you find my fingerprints on something, that's probably not mine. But in terms of working with the UK regulators, even though it's a principles-based regulatory environment, I have found that they are remarkably open, more so than US regulators, to actually not only meet, but discuss opportunities and discuss not partnerships, but ways to work together. I think, so regulators in the UK won't necessarily endorse a product, but if you make part of a product open source, they love it.
Yeah.
Once you get past that, their innovation hub, their regulatory sandbox, the cooperation that they have with many other regulatory bodies are phenomenal. I mean, right now you've got, there was a lot of talk about the US-UK privacy shield, but now you've got the FCA cooperating with the Monetary Authority of Singapore and numerous other regulatory bodies, and they're the agreements that they're going to be coming to and that they're discussing right now are fantastic. And one sort of way to look at that is, I like to make an analogy, and I'll stop in a second, but Dubai and Abu Dhabi. Dubai for its technology regulation models itself more after the US, Abu Dhabi more after the UK. the most advanced country in terms of strict cybersecurity and technology regulation is Singapore. They say what they need and require, and they mean it with extremely rigorous fines. Right now, Singapore and Abu Dhabi are working with the FCA. They're cooperating with that model. And the Abu Dhabi regulators, a lot of them are former Singapore regulators too. So everyone's going towards the FCA model.
Yeah.
The US is a little bit slower getting there, but I think that that's going to be the model that'll be required in the future as technology moves faster and faster and regulators need to keep up. That was a lot.
You guys want to add to that?
I think I can concur with Paul that in the UK the FCA has been very responsive, very collaborative. If we look at the newest the MAR regulation, the market abuse regulation, as well as MiFID II, I think have been much more prescriptive than any regulations have been in the past. And they've also been turned into legislation now. And therefore enforceable. They also have extraterritorial impact. So not only UK companies trading in the UK, but also companies in the US or elsewhere in Europe have to comply with these regulations, which makes it from a UK-US company a great drive to sell outside of the UK. So it's a benefit to us. But I have to admit that also in the US, the FTC has been very forthcoming. SEC even, we had discussions with them, and they have been forthcoming and open and proactive as well.
So let me add to that question. So assuming that Article 50, the referendum, is invoked, then do you see this impacting your operations in any way? And if so, how?
So in Britain at the moment, we have European membership. Sorry.
Can you hear us back there?
I'll just shout, it's easier, right?
Okay.
So in Britain, we're a current member state of the EU.
Yeah.
So market abuse, a bit of European regulation explanation, you have directives. Right? A directive is the European entity basically saying you have to implement something like this. So the FCA implemented lots and lots of rules in the FCA handbook to implement the market abuse directive. You then have regulations. Regulations are directly applicable in the member state regardless of what you have enacted, and you have to make sure that you don't have something in your own legislation that contravenes it. So now what we've got is a regulation applicable to member states and Article 50.
Right.
So what will happen is when we secede, we will still have exactly the same legislation because the requirement of a regulation is that whatever you enacted had to be in accordance with it. But from that moment on, there will be divergence. But this is not new, right? Switzerland is not a member of the EU. Switzerland is also a financial community where we have legislation, regulations that we have to follow. So what we did as an institution is work out a matrix. What are the rules in Switzerland? What are the rules under ESMA? What's the rule in the FCA handbook? And importantly, what are the rules under Dodd-Frank? Now, from my perspective, to have 4 or 5 jurisdictions doesn't really matter. 6 or 7. As long as you have more than one, you already have to cater to those situations. The interesting thing, and Kurt touched on this, is that for the first time you have extraterritorial impact going over to the US. Now normally in Britain we're kind of used to the other way around. But this time this is really interesting. And loads of US firms don't realise that if they're trading with US dollars in a NASDAQ listed stock that happens to have a dual listing in Europe, that they're caught by the regulation. This is news to people. You know, the David Einhorn Greenlight Capital, that instance showed the difference, the very subtle difference between a definition of insider trading on one side of the Atlantic and the other side of the Atlantic means that you are guilty of a crime. That's really important. So from my perspective, Article 50 is no different from the current situation. It just adds, one more jurisdiction to us that at the moment is very, very similar to the ones we already have.
So I think that there's a bit of a difference. And it's just, I mean, in the tech space, there's a lot of issues with with sort of data sovereignty issues. Where are you hosting customer account files, and there's with those issues, you'll have a company that's operating in England that hosts customer account files on AWS or Azure or a SoftLayer. Neither companies of which have servers in England, and they have servers in Ireland and in Frankfurt. But with the whole sort of EU, everyone all together, people kind of look over that. But now, this could actually be a violation of onshoring, offshoring. There's just, and I touched upon this before, but the principles versus prescriptive-based legislation. When you have a principles-based regulation that that you can fill in with a lot of prescriptive legislation or legislation from other countries, the EU was great at establishing certain standards, and the UK, and you can kind of build a profile with that. But a lot of details about upcoming technology profiles are going to have to be explicitly regulated by the UK regulator now, or ISO or BSI will have to keep up. But I think that if Article 50 gets invoked, there's a lot of other issues just in terms of your IP. Your patents are okay. Your copyrights and trademarks you may have to refile. If you're a small company that's looking for investment, how does that impact EIS investments? How does your search for talent? I mean, the UK has a tremendous amount of talent right now. It depends what happens. How people treat skilled workers, skilled immigrants in the UK, what will happen in terms of that structure. So talent, market access, will there still be as much market access as there is now? And then these are all elements that make me think that if Article 50 is invoked, I'm not going to say one way or the other whether or not I think it's like stay or go or what have you, but I think that it needs to be looked at as an opportunity which demands a lot of work, energy, and attention, but an opportunity nonetheless. And as I mentioned before, regulators like the FCA are establishing the tools in place to try and address a lot of the new regulatory responsibilities and workload that's going to come up. But I imagine a lot of the IP firms in the UK are going to be very happy to see what's going to happen when there are IP challenges from the EU and England. And so, I mean, it's an opportunity, but it'll require a lot of work. I just see the start of that work happening. And if everyone else in the UK has as much energy as UKTI and London and Partners has, I have no doubt that everything is going to be fine. Because they have a lot of energy. That's...
Yeah, I woke up that morning after the referendum, and I got an email from my board asking, Kurt, what's the impact? What's Brexit gonna do for the company? So I take my phone, I call Boris, and I say, Boris, do you have a plan? He said, no, it's a great idea. You don't need plans for a great idea. So
I'm gonna use that one.
So the biggest impact on us at the moment is uncertainty. I don't have any idea what it's going to be from a regulatory perspective. We don't think that it will have a big impact on us. But I did a hands up at my last all staff meeting, and half of them are Europeans without a UK passport. Half of the soccer players in England also have no UK passport. A lot of them are Belgians, by the way. So probably they will find a solution for that. In the meantime, our solution is 20% cheaper outside of the UK, which is great for a business. Will that change again? I don't know. Luckily, our cost base is in the UK. Yeah. So there are a lot of questions for us on the long term. Also, will as London has been the center of trading, will that change or will that shift? There's the whole discussion of the LSE and Deutsche Börse that's going to merge, and there's there is quite some consensus that a lot of the trade will actually move outside of London and go to Frankfurt. That will have a huge impact on where our clients are going to be located and where we as a business have to follow in sales as well as in operations. So yes, it has an impact, but is there a plan? I hope there was some more clarity for us as entrepreneurs.
Yeah, I mean, I've read articles that talk about Germany or Berlin, not just Frankfurt, Berlin as being another potential hub for FinTech. In light of all of this. I read, there was an interesting piece from it was JWG Consulting. They profiled a lot of the different technologies being brought to bear for RegTech. Not just blockchain, but open source, semantic language. So the question to you is, you guys are 3 examples of RegTech companies. And so what hasn't happened yet that you think is going to happen that will be more transformative for the RegTech industry going forward? Put your futurist hat on.
Okay, so
Yeah.
things that everyone is really interested in: deep learning,
Yeah.
neural nets. Like, these are the catchwords. Like, if you say fintech, deep learning, neural net, then you can probably get about 3 million in terms of investment within about an hour, which is kind of ridiculous. But why is that, right? So the problems with deep learning and neural networks for regulators at the moment is they're new. So you have to trust a black box. And for a regulator, no one likes a black box. But that's because the black box at the moment is a black box. And we haven't yet proven that these things are better or are as good as the current kind of human implementation. So we have a research and development department that's looking into this kind of stuff. Can we do some things that are very difficult for a kind of classical, more algorithmic approach to solving a problem? If you can do that in small pockets, and if you can bring the regulator with you so that it's collaborative, they understand, they're not scared, this is something that I think could be transformative. Because the speed of a heuristic is incredibly fast compared to the progressional kind of ordinal way of doing it.
Yeah, I remember when I was in business school many, many years ago, it was the early days of neural networks.
Well, it's like nuclear fusion. It's like it's 5 years away and it always will be.
Yeah.
So I'm building upon that. If you do find the perfect solution to say everything that's going on in that black box, I think the DoD just put out an RFP for that. So get some business there. But in terms of what I see kind of as the technology opportunities for RegTech, another thing you touched upon is cooperation with the regulators. You can't fight the regulators, and you don't want to fight the regulators, no matter how big you are. So it actually empowering the regulators and cooperating with them and using different tools like the sandbox, like the innovation hub, are great ways to create that dialogue going forward. And I think that open source technologies and companies creating open source solutions to build in almost like plug and play into a broader system. And open source that can also be fully audited and analyzed is actually the way that a lot of things will be going progressively. Through our platform, we actually see a lot of cybersecurity and technology compliance gaps before any companies do. And we also have a confidential report we send to the regulators every month about the conflicts with their upcoming regulation. By the way, you just passed this law, which directly conflicts with this law in that jurisdiction. There are tons of opportunities to address these compliance gaps. And I think that it'll be like incubators and hackathons and companies that want to create the little solution for that, little solution for that. It'll be just a cluster. Just like a peppering of all these solutions out there to try and to work with the regulators, and some of them open source, some of them not. But I think that'll mostly be automating what's out there. I think it'll be a lot of AI, machine learning, automation to be able to remove human error and have sort of regulation and the sector be one eventually. Some singularity there.
Right.
I'm always surprised how many simple things have never been done. So yes, there is artificial intelligence and neural networks and things like that, but I think and what we're doing, it's not as big a business as the core business is. And if I see how difficult it is, and talk with Tesla, if you have one accident in your black box, it becomes very hard to overcome. So I think if we already focus on just doing the simple things really well for the next 2-3 years, we'll make a good living, and then see which of those technologies really mature and are at a point that probably in other businesses where there is much more profit to be made or matured, and then take them into our business. I'm a bit skeptic with open source if you talk about compliance and market abuse things, because you never want to give a trader an open box so he can look at what you're actually looking for. There are
limits.
There are limits in what you can do there, but I do think that the underlying technologies, yes, big data technologies, analytical tools that are available in the open source really help us in creating products much faster and much easier at a lower cost. And I think one of the major changes has been the cloud. If I look what we can do now with a team of 25, 30 people compared what you could do 5-6 years ago when you actually had to spin up real hardware servers, and that you didn't have those open source cloud tools, we probably would have had a team of 100 people to do the same thing, and now we're doing it with 25 people, so we can offer solutions at a much lower cost. I think that in itself is revolutionary. So if we keep going on that track, we can do much more with less people and be more efficient.
Right. So one last question for me, and then I'm going to open it up for Q&A. What excites you about your companies? Why is the future bright? What would you want investors, clients, business partners to know in closing?
If I can take it first, I'm excited because of the people in my company. If I look at those, some of those people that come off the benches of the great UK schools, and how smart those kids are, and how quick that they are, and how quick that they contribute to the company, that makes me really excited. And I think there's a lot of knowledge that comes out of different industries, like I said, things that have matured outside of our space that we can just take in, and that come with great intelligence, great people. It really excites me.
So, compliance can be used as a weapon as well as a defense. And I know that there are large financial institutions that when there's a company that develops a great idea, the financial institution can say, hey, regulator, that new company, they may not be compliant with AML, or they may not be compliant with PCI, or what have you. That triggers an audit, costs a lot of money. The CEO panics, and they're spending a lot more money, they lose focus, and then either they shut down or financial institution sweeps in and says, hey, we'll buy your product, we'll buy all your IP. Or just tell us everything about your product, and then they take the IP because there was no NDA or what have you. So I'm excited about our product because we democratize compliance. And by doing that, we're leveling the playing field so that people with great ideas can actually make it into the sphere. So I don't know how Robinhood did it, but I love that Robinhood exists. You had these... you had to have a trader on the floor and have someone to put you in touch with a trader to be able to trade a stock. Then you had Ameritrade, Scottrade, all these, $7 to $10 a trade. Now you can trade for free. I think that's great. So promoting responsible innovation and democratizing compliance, I think will bring a lot of great ideas up, and will also be able to provide a lot. Our platform also provides an opportunity to see where the problems are before they really hit hard. And I'm excited about that because then we can start dialogues between regulators, between countries, within industries and sectors, saying, well, you're going to have this problem. Why not nip it in the bud now, and then you'll save a lot later.
And I'm excited because we've got a small company, right? And this small company can do things that monolithic companies like, I don't know, the Goldman Sachs, the UBS, sorry, I have to put the in front, it's funnier, HSBC, these have huge resource, enormous amounts of cash, incredibly bright people working for them, but a structure so ossified, so solidified, that they're incapable of actually developing the tools that they need. So you have a small firm like mine that can actually do things that these guys can't. That's incredibly exciting. And it means, for me, that world domination is one step closer.
And how much did you spend on compliance? Sorry, I'm just...
So thanks, guys, for that great panel discussion. I'm going to open this up for Q&A, and then for anybody that's out there in the live stream, it's hashtag NYPAY if you want to tweet questions. David, do I have that right? Yeah. So, right. I always want to make sure. So any questions? Maria.
Yeah, this is going to feel out of left field, but I figure this is an innovative group, so I'm going to just throw it out there. I happen to have spent the day at the sustainable, looking at the SDGs, which are around development goals and sustainable development globally, and it's the 2030 targets. One of the topics that came up was around the use of data, transparency, and the need for innovation and injecting the private sector. What I was struck by was how un-FinTech it was in that room, and how there was a need for these sort of really wrangly, folks who are used to trying to figure out how to squeeze some of the insight out of financial flows, and the need to leverage capital in new ways, create new asset classes was discussed. The need, new payment models that will be looking at whether somebody really is who they are in new ways. What do you think is the opportunity to create? But the promise was the idea that there's potentially a 30% growth in the global economy if we reach these goals. That could have been foreseen under any other circumstances. What would be the best way to engage, sort of harness the fuel and insights of some of this transparency, the automation that you guys are working on, and the insight of managing and measuring flows of capital in ways that would help support those goals at a profit?
I don't mind saying something completely off the cuff that I've thought long and hard about. So, in any situation, more information is better, right? Investors make better decisions. With technology, you are able to analyze large amounts of data and make better decisions. That will in turn make us more profitable, not necessarily happier, but probably wealthier and able to afford more things like DVD players, which don't exist anymore, VHS players, which don't exist anymore, and all these things up in my loft or attic. So the key, really, I think, is what we need is lots and lots of data about everything, because we'll understand everything better if we know about it. At the moment, if you look back 20 years, what did we know about investing? What did we know about finance? We now know so much more. We may not be happier, but I certainly have, the life of a king in the 17th century whipped, right? I mean, I have a longer lifespan. I'm not going to, get murdered by people trying to take my crown, the pointy thing on my head. So many things are better for me because we have made progressions, and all of that is based on information. All of that is based on more openness, about opening up cartels, making sure that everyone has free access to as much as they can in terms of education, access to become wealthy. So I know it's a very general answer, but I just think if you increase the exposure of everyone to more information, give them technology like ours, we're all in the technology space, and there will be spin-offs from the things that we create. That's got to be great. We won't be happier, but we'll be better off.
You said 20 years ago, what did we know about finance or investing? I mean, I went to business school 20 years ago. I like to think we learned a little bit.
Have we learned anything in the last 20 years or 30 years?
I think we've learned a lot in the last 20 years,
My
30
point.
years. Yeah.
My take on it is actually, we've been talking about democratizing compliance. Yeah. Actually, democratizing data is still far off. Data is very expensive. Good data is it's only the big financial institutions. If you go to Thomson Reuters or you go to Bloomberg,
it's our biggest cost.
It's for us as well. So that you pay more for the data to run our application than actually run the application. So I do think there is a lot of pressure on the exchanges to make to disclose much more data publicly. But then again, because Thomson Reuters the data vendors are actually subsidizing them, and their biggest income is not the trade anymore, is actually selling their data. So if you want to benefit, and if you want to have a bigger benefit globally, then there has to be more public data, so open source of data. And I also think that the cycle of development of new ideas has shortened dramatically. And if we keep on trying more things and making sure that we fail a lot, but at a much lower cost, that together, so all those tools, that with cheaper data, would allow us indeed to build a future where you would more than benefit 30% on a global basis. So I think it's a combination of short development cycles and quick to market of new ideas and products, together with, unfortunately, we have to find a way to make data cheaper.
If I can just build upon that, I mean, I firmly believe that if there was more open data, that would be excellent, especially for the development goals. There are risks for the data. How much data are you giving that may compromise privacy issues in different jurisdictions? What's the integrity of that data, and so on and so forth. But when you're actually, it's a great opportunity. What we're starting with at Helm is just democratizing the compliance and the access to be able to develop solutions to try and fail without having to. I mean, it's a TurboTax questionnaire. We scan your code. I mean, and it's very affordable. So it's so that you can try those solutions. So and I mean, some of the best solutions come out of left field. So I actually used to be an advisor at the World Bank. I was a senior advisor in the office of the Secretary Clinton at the State Department. And some of the best ideas came from left field. People who were like, hey, why don't you try and do this? You wouldn't think it would make a difference. But for instance, there's one company in South Africa right now that, they, within, I think, like 8 months of operation, had 1 million users. And there was the unbanked. Then there were people who joined banks and they didn't like the fees. And as soon as they got paid, they would withdraw the money to avoid the fees. And this actually encourages them to get back into banking, and it educates them. And I think that, increasing market access is one of the sectors that may actually help achieve some of those goals. And the lower barrier to entry in terms of the compliance automation, the better. In terms of upcoming ideas, I'm just going to throw this out there. Someone try and find out a way to apply Pokemon Go to the development goals using finance, and you've got something great.
Funny enough, that came up.
Oh, gosh.
Each of you talk about how you charge your clients, what the revenue models are. Is it success-based, or is it time-based, or is there some sort of subscription?
Sure. So we run a subscription model. It's tiered by size, but very roughly tiered. So you have like a tier 1 bank, a tier 2 bank buy side. And it's also priced by asset class.
We use a subscription model. We break down the entire cycle of technology from, you have a web page all the way down to, app, your other tools, cybersecurity, outsourcing and onshoring, offshoring, and so on. Each one of those modules is a very fair price. When you have all 10 modules, then you are considered a mid-sized company, and we add on those laws that don't necessarily just apply to cybersecurity or technology, including the peer-to-peer lending laws, the crowdfunding laws, and so on. But it's a monthly cost, and each module is $50 a month.
We take the Trading Hub price, lower that with 10% if they buy it this time before quarter end, and that's it. No, it's also subscription based.
The reason I asked the question, and we hit on it earlier with ROI, but it seems to me that all of you're doing really innovative things in helping your customers save money, and I just wonder why you wouldn't do it more on a success base rather than just a subscription.
Well, define success in finding someone who's committing market abuse. Yay, we found someone. You have no fund anymore.
That's why there's massive cost savings, right? There, you can do all sorts of case studies, and I don't know.
I can actually add on that. in our conversations with the regulators, the regulator would say, hey, why are we telling you this when someone else is just going to ask the same question, someone else has asked the same question, which is why through a combination of very creative programming, through open data licenses, and through through a combination of multiple factors, we're able to provide a product that will essentially provide you the real-time compliance, which is why we're a subscription model. And it'll give you the visibility. We don't want to charge a lot, and the regulator wouldn't like if we charged a lot. Regulators won't buy into something where we're charging $1,000, $5,000 to a startup. No, we're here to lower the barrier to entry.
Lenore.
So could you talk a little bit about the challenges for a startup versus a large bank?
Okay.
So I work with a lot of startups, and I don't think they appreciate some of the requirements around compliance. So, I'm just curious if you're seeing a difference, and if you guys are targeting larger institutions, or whether you have a solution for smaller firms that really need your help.
Yeah. So just for those at the back, we're just being asked, do you have a slightly different approach to the big banks, to smaller customers? Because obviously some new startups don't understand the challenges of working with the big banks. It's sometimes easier to work with smaller firms. We found that it is a nightmare to deal with large investment banks. They generally take 2 years to make a decision, and the half-life of someone that works on the decision is 1 year and 6 months. So I get to that point, they leave and go here, and we start the process again over there. It's brilliant. It's a great game. It lasts forever. It's like Monopoly, just takes longer, less fun. But if you do that, if you persist with it, eventually you will find the bank that is saying, I don't want to be in the middle, I want to be the thought leader. So someone described this when they were talking about their investment bank. They said, none of us wants to be first, and none of us wants to be last. So this is a bit like a bunch of people all holding hands, trying to decide if they want another drink or if they actually need to go to the bathroom. And like 1 minute they teeter that way, the next minute they teeter this way, and then suddenly someone makes a break for the loo, and they're all running after them trying to get in there first. This is crazy, right? So you start to deal with the firms who have a much quicker cycle, right? You deal with the buy side. The buy side will get you in to talk to the person who makes a decision. And they'll say, we're going to make a decision in 4 weeks' time. And when we make the decision, you'll be in production in 6 weeks' time. You then build up your practice by dealing with firms that are capable of making a decision. Once you've got that, the bigger firms, like the banks, will then say, oh, well, now we can see you deal with those customers and you've gone through their processes, so now you're kind of fit for our processes. That works, but you have to be so persistent. I mean, we've had some negotiations that are ongoing. I send an email, I say, would you like to see us? They say, yes, come in next week. And I reply, when next week? In 6 months' time, I send another email and say, when next week?
There's an app for that. Yeah. But actually, kind of building upon that, I heard two questions there, and correct me if I'm wrong. One is the risks. And the other is why not? How do you market to big banks? When we sell to big banks, we actually are in the process of exploring different partnerships. We have proofs of concept with some large financial institutions, which are great, but they require a lot of onboarding. Our license applies to each. So your document retention operations, one license. Your digital marketing operations, one license, and so on and so forth. And the big banks need this. I mean, one example is big banks send on average 9 to 10 million texts a day. And if one server in one corner goes down and tech ops sees that, they're like, oh, this is not important. This is just a text message opt-in, opt-out server. Well, if a bank sends text messages to people who opt out of receiving text messages, each one is a $500 fine pursuant to the Telephone Consumer Protection Act. And a bank last February settled for a fraction of what the fine would have been for $39 million. So they need this too, so it's sold by the operation, but startups really, really benefit the most, and it was built for startups, and we're partnering with the large consultancy firms to be able to integrate it with those operations in big banks. The other point is in terms of risks that these different groups are facing. I think so banks have the legal and compliance and risk departments already, which is great to mitigate those risks, but in terms of I'll give you all an example. And don't quote me verbatim, but Apple Pay is technically illegal. If you're a startup, you don't know that. If you're a large bank, you probably don't know that unless your lawyers are doing a good job. And if you look at the Apple Pay terms and conditions of different banks, I've only seen 3 banks have this in their terms and conditions. But basically, to make a long thing short, a multi-factor authentication, something you know are or have, you sign up for Apple Pay, you know your password, you sign up, you get an out-of-band text message, which tokenizes your phone, so that's something you have. Your phone is the token, you have a password, that's great. You switch over to a fingerprint. Unfortunately, the iPhone was designed to store 6 different fingerprints. So, when boyfriends and girlfriends break up, and, a angry ex goes into your bank account using a fingerprint and can wipe your bank account, which makes the banks liable unless they have one sentence, usually on page 112, 13, or 14, saying, if you use biometrics to authenticate an Apple Pay, we're not liable for any fraud that happens in the account, neither is Apple. Now, small companies would have no idea to implement something like that. Big banks barely have any idea to know something like that because, half of the people are trying to find out what the hell to do with the legacy systems, while the other half are trying to invent the next big thing while not actually really paying attention to exactly what's going on. So the risks are there. They're prevalent for large and small companies. A small company could face a $39 million fine, but that would just put them out of business. The bank that I mentioned, which I didn't mention, which is good. Did I mention their name? No. So good. They paid the fine, but they were able to pay the fine. And they were large enough to be able to negotiate with regulators, provide remediation plans, and basically negotiate the way compliance negotiates. So, that's 2 different, answering both your questions.
Was there a question in the back of the room?
Yes, I had a question on data sovereignty. We're a RegTech company that works with a lot of regulators and financial institutions around the world. And we have data centers that we own ourselves, and we're actually working with Citi, to build up more. When it comes to data sovereignty, are you seeing that as a big issue, or have the regulators actually accepted the fact that they can put their data in other jurisdictions and move on from there?
My experience, and do you want this just on regulators? Because I can give it on buy side and sell side as well, but I can restrict it to regulators if you want.
In my opinion, I would focus on regulators because we're doing some work with Her Majesty's in the UK to manage like 1 billion transactions a day for AML, KYC stuff with banks, and they finally come to the point that a country like Mauritius, they'll put their data center somewhere else because they don't have the infrastructure for it. They're fine with that data protection. Are you seeing that as a hurdle these days, or have they finally adopted the mentality of, okay, we understand that you can't have data centers in every country, it's okay to have it in country X?
Yeah. My experience is that when you're doing proof of concepts, when you're doing trials, regulators are surprisingly willing to give you data. I was really surprised. I mean, we did it across 4 or 5 jurisdictions, and they gave data. And I won't name names, but someone sent an unencrypted CD through the post. We came. The data's arrived. Sorry. Yes, that's how long ago it was. But it's kind of interesting because as soon as you say we can do something useful, it all has to be within their firewall. But to use my experience on the buy side, the tier 2s, is they are increasingly comfortable with the cloud. It's taken a really, really long time and a lot of persuasion. And I actually went into a big bank's RFP. It's a US bank. And I started off by saying, I know that you want the answer to be on your hardware. Why are you asking me questions about the cloud? You know we do the cloud. You know that we have customers on the cloud. And they said, yes. The answer is we want it on our own hardware, but tell us about the cloud. And that's starting to change. So we find the tier 2s buy side very comfortable having the data. The same is probably true of smaller regulators. There's no way for them to handle the kind of throughput or the compute power in their own jurisdiction. They have no choice, really.
So I'm going to build on that from kind of a different perspective, because we have a lot of customers that go through our platform and, we say, where do you store customer account information? or to use a third party. If they click on AWS, they have a lower compliance score in England, and they can click on DigitalOcean or Carenza because those two actually have servers in England that are compliant. First thing, if you're concerned about it, apply to the sandbox. Best thing is to actually get the regulators looking directly at what you're doing and say, oh, actually, this is okay because it's a sandbox, or that's one way around it. But another way around it, the way that we operate, is we don't touch any of your information. We store it on your data center, so we don't have to deal with these issues. But I guess it boils down to the violations, whether or not a regulator wants to be. The regulator might punish you when they become aware. So if there's an exam, audit, or test, and they find out, hey, you're dealing with information that's not on shore, well, then you have to worry about what's going to happen there. But I found that in some jurisdictions, there are regulators that will try and find something wrong just to put pressure on you, especially if you're a high-profile company. So if you unzip a file in like Russia or China that's using AES-256 encryption, which technically isn't authorized in those jurisdictions unless you import it and you export it from the US explicitly through the, I think it's BIS. And, but, if they realize you're high profile and you're operating AES-256, they'll say, you know what, actually, we're going to fine you for that. And it's still considered criminal to operate unauthorized encryption in this jurisdiction. You're going to jail. So yeah, they can punish you when they're aware of it. They can use it as an opportunity to impact your business for their own benefit, or, and this is obviously in some shadier jurisdictions, or there are a lot more permissive regimes, and I think we're going towards a more, at least for onshoring, offshoring, a more permissive legislative framework or regulatory framework, just like authentication, MFA, we've got the FIDO Alliance right now who's arguing for eliminating passwords entirely. And NIST has actually been listening to that, and there could be some developments there. So technology will always be changing, going towards more cooperative, I think. But, better be careful. Better safe than sorry.
Can I just a follow-up to that? You talked about a more permissive regulatory environment. Do you mean in the UK or the US?
Context. Which I was just kind of speaking in train of thought.
Okay.
No, like the UK is a little bit more permissive. I mean, there are tons of companies operating in England that maybe don't have their customer account data unshored. But maybe they're small companies. Maybe it's the fact that the regulators don't have enough staff to really audit everyone instantly, unless they had a tool to do it. But we don't do that. But it's not the highest priority. If you were doing something that was a higher priority on the agenda, and you were impacting it, like you were doing Bitcoin and not doing proper AML checks, well, yeah, you probably get a lot more scrutiny and they'll come down on you harder. But onshoring, offshoring, I think we're trending towards more open, especially given I think there was a Microsoft case yesterday that was decided. That when the U.S. said it was, I think, brought challenging the USA Patriot Act's access to data anywhere in the world. So I can't speak to that exactly. I haven't read the case yet. It was just yesterday. But I think we're trending towards more open.
Real quick, Phil, have there been any questions coming in on the Twitter feed? Not at all.
Now,
Okay.
do you think the herd mentality will drive where this data is stored? Because we deal with a lot of asset guys that they want $1 trillion of assets under management before they jump onto a platform. Because they then feel if the regulators point a finger at them, they can say, well, I'm doing what everybody in my industry is doing. Do you see that as, the driving force of actually adopting this type of technology?
Yeah, certainly a lot of that. But the main thing, so for your business, very similar to ours, start with the thought leaders, the people that are actually saying, yeah, I want to be at the front of this queue. I want to be onboarded before anyone else, because that helps you build that community of people. The first question anyone asks a startup is, who are your customers? I'm a startup. It's so frustrating, right? But when you get those customers, and I guess we're now kind of SME territory, that once you've got those customers, it's really easy. You build on that by saying, well, guys, actually, these are the names that we've got. But you need to find those people, and it takes a lot of pounding the pavements. Like for the last year and a half, I've been doing 2 to 3 meetings every single day for the last year and a half. In the last 6 months, it's up to 4. So I'm out of the office all the time just talking to people, because eventually you find those people that want to be at the front of the queue. When you find them, then you're right, the herd mentality, everyone says, okay, well, everyone else has chosen that. How can the regulator say we're all wrong?
I look at it more from a macroeconomical point of view, and when the Consul General said, UK, great country for FinTech, 20% tax regime. Well, actually, taxes are not the only driver for FinTech to locate yourself in a location. The cost of infrastructure, and certainly hosting and managing, hosting your solutions and storing data is for businesses like us very much a determining factor where we will locate. And the cost is dependent on the size of who is using it. So if you're in a small country and your regulator is actually very defensive, you never will get the scale to get a low enough cost. So I think the regulators will be or are already pragmatic in the sense that they understand that the cost of doing business is very important. And in our business, in big data, it's all about the cost of your infrastructure and your hosting. So the lower that is, and that's why AWS and Microsoft are so successful. It's because we live on their infrastructure, and it has to have the right scale. And we cannot go and say to a Swiss company, a Swiss bank, we're uncompetitive if you don't allow us to host on Amazon in either Frankfurt or in Ireland, because that's where that's the only way that we can be cost competitive from a hosting and servicing perspective.
Or you can
regulatory mentality, understanding that they need to allow you to host in a low-cost environment, or else you won't be successful.
Otherwise, we can't be successful.
Why not host in Oregon then? I mean, if you're going to completely not deal with the onshoring issue, if you spin up your instance in Ireland, or the cost is more expensive because Oregon has hydroelectric power where the costs are lower.
And it maybe comes to how that we can be more sustainable overall as an economy. Yes, we should think about that. But we do have clients actually that are US clients that actually have their DR on Amazon in Ireland, and it's because of cost and security, and the regulator is okay with it. They've discussed it.
Some regulators by nation more aware of that than others, or does it just depend on the individual?
I'm not going to speak in.
I don't want to put you on the spot, but
so I have the impression that they are more pragmatic about these kind of topics than they have been in the past.
In general, or in a particular area?
In general. Okay. I'm not going to be specific.
They're getting it. Okay. Yeah, I'm just wondering if there's geographic distinctions that make it easier to start your business in one location versus another.
There are, definitely. But, yeah.
So in our community, we've got New York, we've got London. Where are you going to start up? New York or London, right? If you're out in South Africa or if you're in Russia, then you're not next to the clients. But I think you have two choices. Like you could be in Europe, and you could be anywhere apart from London, and I think you'd be in the wrong place. And I think that is true whether or not you have Brexit or not. I think you need to be where your clients are. That's why we're all here, to try and further the business in a different jurisdiction. That's where the clients are. And the cost of doing business for me is minimal compared to the value add that we provide to those companies. So, whether or not my server is cheaper in Oregon or London or Frankfurt, that's not where I'm making my money. I'm not saying, well, I've got to save a few cents here and there because my server cost is tiny. The cost I have is hiring the right people with the right brains that have been traders or have been, working at Goldman Sachs or Merrill in dev communities, I need to go where those people live. They don't live anywhere apart from, a few do, but most of them live in London and New York. That's where those institutions are biggest. So for me, that's where I go. My server costs, I don't care.
But I also think that it depends on the regulation that you're trying to address. For us, we deal with FACTA CRS on a daily basis. So we work with the IRS, for 2019, understanding their roadmap. We're impacted with dealing with people in Russia. We're dealing with people in China. We're never going to put customer data in China by any means, or in Russia. So we have to adjust, our strategy and say, okay, if we want that contract with the Russian tax authority, we have to deal with this data provider who's going to host our solution, and then work with that data exchange, then going into EU, the Americas, wherever that is at.
I have customers who are Russian entities, large Russian entities, and there is no way that I'm going to have my data centers in Russia. So I can either install on their own hardware, we can do that, or I'm going to have it where I supply services for all of my customers. But I'm not going to kind of get a third-party intermediary to do that.
So speaking of your problem, I actually have seen how some people are addressing this onshoring, offshoring issue, and it's creative encryption mechanisms are pretty much the way that people get around it, because they get an excuse. Hey, my data is there, but it's all encrypted, and the keys are in a different location, which is where they're supposed to be, through a different server, what have you. People get very creative as long as you were trying to pay attention to it and trying to do right. There are a lot of conflicts with onshoring, offshoring. I think that the best example, the way to see the way that regulators look at it and how the industry will treat it is illegal music. Back in the day, some people downloaded illegal music. And that was bad, and regulators, found like 2 or 3 people. I remember I was living in the UK at the time. Regulators fined some woman something like $250,000 for downloading a few songs. And, there's examples that are made, and then the industry says, well, we need to find something different. Then Pandora and Spotify come around because they switch around the business model. So either for now, do everything you can to try and comply with what the regulators are saying, and be as transparent as possible with them, especially as you're engaging them. But then know that someone's going to develop a different business model that will be able to address these issues.
I'm going to take one more question, and then we can just break for networking afterwards, and the panelists will be around for the duration of that as well. Rod, why don't we?
Sure. I think we're missing one point about location of data, and it's more historic than otherwise. And that is that the location of data laws were made for historically, for 3 reasons. And I'm really talking about data on individuals. They were made for perceived privacy issues. That was the excuse. The reality is that they were made for labor reasons. They wanted the labor kept in the country. And they wanted their people and the country to learn. So to build the skill sets. So I think it's important when you're thinking about these things, and you're thinking about talking to regulators, talking to government, that you think about what some of the real goals are. Because the real goals are about labor, they want jobs in the country, and they want to learn in the country the skills. They don't want the skills going to another country and not learning about it.
Just one thing. For example, regarding protection of employee, it's Luxembourg. Luxembourg, they ask you to keep the data locally to save regarding privacy, it's example, it's France. And there was an issue recently with the US regarding, it's called the safe harbor transmission of data, which is solved today.
Yeah. So, there wasn't a question there, but we have experience of, for example, Swiss private clients. Now, Switzerland, understandably, is very sensitive about sharing information. It's actually crime over there to share private information. And for good reason. Lots of very, very rich and lovely people have their money there, and they don't want people finding out, because then they can have their children kidnapped, and that's a bad thing. We all agree on that. So, what do? You can either take our approach and say, let's make sure that we take this data, we encrypt it, and you can come and inspect us, and you can see how good we are at doing that. Or you can install behind their firewall. And you have to have the two options. Because you have some clients that say, absolutely, we must have this. And other clients that say, I'm okay about that. And we have Swiss private bank, one that wants the data here, Swiss private bank that says, we've looked at you. We think it's fine with you. If you know your client and you work out what they want, and you can do both, what does it matter? I don't mind. I can supply my services to you.
Isn't one right and one wrong?
No.
So they're both acceptable.
So when you say right and wrong, do you mean against the law and not against the law?
Yeah.
So if they are sending data out which doesn't contain personal information, so they have IDs, for example, they're not committing any crime. I don't know if Joe Bloggs is ID 1234. But they're worried that if they give me 1234, then that leaked out, that combined with 17 different other pieces of information, someone might find out that's Joe Bloggs. So one is not right or wrong, one is perceived to be lower risk than the other. But let me ask you this, are you sure that those Swiss private banks are as good as we are at making sure that data is secure? You know, is an institution that's 120 years old, that has lots of people dressed in lovely suits and they go for lovely long lunches, not that I don't, but are those people as good as the tech entrepreneurs at making sure that that data is safe? It's really a choice.
It's country dependent.
So the whole argument of labor and the location of labor, it's a great question to think about, because where is labor? Like, if you look at the whole fintech industry, I once had an event in Portugal, and there is a thriving fintech scene in Portugal. There's no labor in Portugal created by fintech because they have protective data laws in Portugal. It doesn't make sense. So for most countries, certainly small countries, it's better to have an open policy. For large countries, of course, like the US and the UK, there might be some more reason to close actually your borders from a data protection perspective. But then again, there are bilateral agreements, and Safe Harbor was one that's now being replaced, so that you can actually, on the topic of PPI, have data stored outside of your jurisdiction, because I think that the labor is not connected to the location of the data anymore. It has more to do with labor laws, with the flexibility of the cost of location, where you find talented, education, skilled people at a low cost. That's where you go and where you set up your business these days.
Yeah, and actually, just building upon that, I mean, it's changing to basically like, push button, spin up an EC2 instance, and you can have information somewhere. The measure of skill required for certain activities is diminishing towards automation, I think. So to have an open regime would be more conducive to businesses coming in and saying, well, if I can come in, I'd like to set up there because the costs are cheaper, and also because I can store my information anywhere, as opposed to establishing myself in a jurisdiction where they're a little bit more restrictive, and it doesn't come down to the skill of the labor.
With that, I want to thank our panel and invite everyone for drinks until they kick us out. Thanks a lot.
Thanks.